Hi, everyone. Welcome back to the Q3 Investor Summit. I am here with Michael Toporek, CEO of Soluna Holdings. Michael, take it away.
Thank you, Jordan. Good afternoon, everybody. Thank you for joining me. This is the presentation of Soluna Holdings for August 2022. I'm going to dispense with the reading of the legal disclosures and disclaimers and jump down to our company overview. We see ourselves as a smart infrastructure company and scaling from crypto mining, which is what we're engaged in right now, to a broader batchable computing business with industries that have high performance computing needs. So right now we have 53 megawatts deployed, and by the end of the year, we expect to have 75 megawatts deployed. We have over 1 exahash in hash rate, and we anticipate having over 1.8 exahash by the end of the year. Our revenue run rate's approximately $27 million, headed to about $40 million by the end of the year. So we see ourselves really quite differently than many of the other companies that are lumped into the space with us. We see ourselves as curtailment solutions providers to the renewable energy business. Our data centers provide a solution to power generators that cannot sell most of their power or a portion of their power. They monetize that power with us, and that allows us to then take that power and sell it as computing capacity. I think you'll also find that the way we approach our business is with a focus on return on invested capital and capital discipline. We're careful about our cost of capital, we're careful about how we allocate our capital, and we're extremely transparent with how we communicate to the capital markets. By that, I mean we release site-level P&L information, both operating and financial data, every month so that you can track our progress in terms of what we're doing. Our data center locations I'll begin with Edith. That was our pilot project. That's about 3 megawatts in Washington State. And we've, over the past, over about 3 years, returned over 3 times our money. You'll notice an important theme here. That's, if you look at our power costs, we've really targeted them to be under 3 cents a kilowatt hour for a very specific reason. As we look back to prior crypto winters, we realized that in order to be profitable every day, one had to have that kind of power cost. So we very specifically engineered the company to have low power cost and be able to be extremely profitable through any kind of crypto winter. So for example, with Marie, at 99% uptime, our costs are higher, but we have the ability to throttle back and toggle that back. And for example, with Dorothy, we're located at a wind farm and able to buy power from a wind farm directly, and especially we're able to buy their curtailed power, they can't sell, and that allows us to really generate significantly lower power costs. So you'll see that we're keyed in on developing high performance data centers that allow more renewable energy to be put on the grid. We're moving from where we are, cryptocurrency mining, to something that I'll get into in a few minutes called batchable computing. So in a nutshell, we buy curtailed energy that is not sold by renewable power plants, and we convert it to low-cost global computing that's of a batch-oriented nature. So batch-oriented computing is not real-time computing. That means it's not banking, it's not retail, it's imagine sending data For example, you have a movie that needs to be transcoded into the HBO format, Netflix format, or Amazon Prime format. That would be sent to high performance computing center, transcoded, and sent back. Same thing with clinical data for pharmaceutical research. Lots of information needs to be crunched, sent out, and returned. That's batch-oriented computing, very similar to cryptocurrency mining. So here's a quick case study of exactly what we're talking about in our problem solution business. You'll see the blue part of the graph is the part of the power that's generated that's actually sold. The orange part is the part that's generated that's unsold. So for example, at this 150 megawatt wind farm, 35% of the power in 2020 was unsold. In order to solve that, if we locate a 50 megawatt data center on that wind farm, buy that curtailed power, we would have reduced that to 18%. And at 150 megawatts, nearly every bit of power generated by this wind farm is sold. So imagine you have a business where 35% of what you produce is thrown into the garbage for no revenue. That's the problem that we're fixing for these wind farms. And that problem is only growing as we put more renewable energy onto the grid. We believe this problem is about $7 billion of lost revenue due to wasted energy. Now you add to that, okay, so we get this wasted energy. What do we do with it? We address a $95 billion market for batch computing. So digital currency, say, is a $10 billion market. Pharmaceutical research on batch computing spends, call it $5 billion. Graphics and video processing, and so on. These are meaningful markets that we expect to transition our computing capacity to. So what expertise do we have in-house to do this? Strong project development and energy expertise, coupled with computing technology and project finance. I think you'll find that the team's knowledge base and intellectual property is really quite different than our competitors. And our data centers themselves are quite different. Our data centers can shut down in 2 seconds, can boot up in 90 seconds, and are extraordinarily power efficient. Comparing our power costs to the power costs of our competitors based on publicly available information to the best of our abilities puts us in the upper quartile to upper decile. However, many of our competitors net off controllable load revenue against their power cost. We are behind the meter. We have no controllable load revenue yet. We're talking to grid operators and power generators about the appropriate protocols and economics of becoming some form of controllable load to get ancillary revenue. If that were to transpire and we netted that off versus our power costs, I would anticipate the potential to get to half of our power costs that we put on this graph. That would put us in the top 3 to 5% globally and assure significant profit margins regardless of market conditions. So beyond Dorothy, we have other problems we're solving for other wind farms. We've titled them Kati, we've titled them Cynthia, and we've actually taken Dorothy and divided Dorothy into 2 chunks, Dorothy 1 and Dorothy 2. Dorothy 1 and 2 share infrastructure, and we've segmented them further and created 1A and 1B, which are each 25 megawatts, and then 2A and 2B, which again are each 25 megawatts for a total of 100 megawatts. Dorothy, we're very focused on building out the first 50 megawatts, and we anticipate powering up at least the first 25 over the first quarter, and likely an additional 25 for a total of 50 as we make our way through the fourth quarter. You'll notice in the picture, that's the wind farm. So we're not drawing power from a wind farm down the road. We're at the wind farm, co-located with the wind farm. So let's kind of wrap this up a little bit. What do you get in terms of investment thesis when you look at our company? Low power costs allow us to be profitable through the cycle. We're a problem solution company for the renewable energy business. Our customer base is going to slowly move into high performance computing. And in terms of operating culture, we're not just a collection of projects. We're focused on high returns on invested capital and a commitment to investor transparency with our detailed monthly operating and financial updates. We've committed to investing through the cycle. We did not put in long lead time orders with Bitmain and commit our capital, a year in advance. We firmly believe in averaging in, buying spot, and that's what we've done in the past. That's what we'll continue to do. That has worked out really well for our equipment cost acquisitions. And in terms of capital raising, we very successfully raised project capital from Spring Lane Capital. Spring Lane is a green infrastructure, renewable infrastructure fund investor that has invested in Dorothy 1A, where we both invest our capital, then they get back their capital along with ours, and we get ours, then they get a hurdle rate, and then we get over 50% of the profit above the hurdle rate. That is, I think, a strong market signal that a well-known infrastructure investor has done their homework and has selected our project because of its economics and ability to deliver strong economic returns for its investors. And so much so that it's actually paying us a percentage of the profits in order to do that. Our team, which I'm going to get into a little bit of detail, John Belzier runs the company day to day. He's the CEO of our operating subsidiary. He's got joined with him, a strong financial officer in Phil Patman, and Dip is a technology guy that's been at places like Lockheed, and Marie and Anna Lynn has really built out and really understands how to run data centers. A strong professional team is running this business for you as an investor. In terms of financials, gone over some of this with you, but really what you can see here is we've continued to grow, and we've grown every quarter in terms of Bitcoin equivalent mined, and we expect to continue that record of growth as we scale into the fourth quarter. We've demonstrated a strong ability to scale. So the Bitcoin mine in Q2 year over year went up 7.5 times, hash rate increased 38 times. And interestingly enough, our revenue only decreased a little over 6% from Q1 to Q2, despite a 21% decline in Bitcoin prices. Obviously, that's because we've continued to scale our business in a capital effective way. You'll see here our cap structure. I will let you know that we have common stock. We also have SLNH, which is a preferred stock, and our enterprise value is about 150 million. Our common stock market cap is about, call it, $70 million. I'd like you to leave you with the thought that Soluna is the right company with the right plan since inception for this sort of volatile environment, where we're actually engineered to thrive in a Bitcoin downturn. Thank you so much for your time very much appreciate you being with me today.
All right, thank you, Michael. It looks like we have some time for some questions. All right, so first question, can you provide an update on where we stand with the batchable computing pilot case?
Yes. As I discussed early on in January with our investors, we've committed to getting at least one referenceable customer by the end of the year. So our effort to do that now includes active dialogues with a university, a pharmaceutical research firm, and 2 media companies. We don't have a signed on customer yet, but there is an active dialogue in terms of their needs and what we can supply to them. We have internal champions at each of those institutions trying to get our solutions implemented. So we continue to drive it towards getting a referenceable customer or customers from our organic efforts. But I don't think I've made it a secret that we are actively seeking targeted acquisition opportunities in this sector. I will be very upfront. I don't think we're white hot with anybody. We're being careful and systematic. But I think the best way to scale this business is a combination of organic and acquisition growth.
All right.
Oh, I guess I answered the second question. Any M&A conversations as you transition? Lots of conversations, nothing white hot. But I suspect that as September rolls in, we will have a more active dialogue, and the team is very focused on making good decisions. And in a way, this tech wreck of the first half of the year has really brought some companies down to earth that, let's just say, before would not have been interested in a dialogue. So what % of our business is Bitcoin related versus other? We do some altcoins, and we do most of those altcoins up at Edith. But Edith is very small compared to our business at this point. So I'd say 93 to 95% of our business is Bitcoin at this point. What location are you talks about being controllable? Is that Dorothy? The answer to that is twofold. We have to get the protocols right with the grid operator and the facility we're at, and iron out the economics. So it's actually more likely that we will have that next location, Kati, as controllable load, and then do Dorothy later. But I can't predict. We're actively talking and trying to get both of those done. So I don't know which one gets done first, but it'll certainly be great to get Dorothy done first, since that's going to be an operating asset before Kati. But where Kati is located, the grid operator is just quicker, more amenable to getting done what we want done. So it's hard for me to predict. So what publicly traded company is a major competitor, and how do your costs compare to theirs? So I laid out a graph which compared our power costs, and there are some that have similar power costs and some that have some slightly better costs than ours, because I think they actually own their own generation. So that gives them a little bit of an edge over ours. It may not be the most capital efficient thing to do, but they do have an edge on some of our power costs. So I would ask you to refer to that, because that is the major governing factor around profitability. There are obviously other costs, but that's probably the best place to start to compare costs. So I would just ask you to look at that. Are all projects US-based, or any development happening outside the US? We have a 2 gigawatt pipeline at various stages of maturity. Some of the earlier projects in our pipeline are in Europe, because they have a similar issue. But I would not say that's next up. The next up projects are more likely sitting in the US right now. That could change quickly, but that's what we have. Next question, has there been any additional feedback from ERCOT since the last update? Is September looking like a strong possibility? We are continuing having active dialogue. September does look like a strong possibility, especially for the 20 megawatts. The signaling that we've gotten from ERCOT is they're probably not going to green light all of the 100 megawatts in September, October. They'll probably ask us to phase in at 25 to 50 megawatt chunks over the course of the fourth quarter and first quarter, which is just fine. We're not ready to light up 100 megawatts anyway. So, and they're being very cooperative with us. They're asking operational questions about when, what, and how, which leads us to believe we're making a fair amount of progress. What percent of our business is crypto versus working with grid operators have nothing to do with crypto? So the value we bring to grid operators is we bring a load to a specific location that can be turned on and off or shaped around certain time periods. But in the end, we're either crypto mining or we'll be batchable or operating a batchable computer load in that site. So it's really, we're working with grid operators and power generators on one end of the equation, and on the other equation, we're working with the crypto mining business to get revenue or batchable computing to get revenue. I hope that's responsive to your question. And everybody, thank you so much for asking questions. Please feel free to type in any follow-ups, since answering questions is certainly more fun than being in a monologue talking about myself on the screen. Can you explain how price downturns can be advantageous for miners? I'll talk about us first. We have a fair amount of miners to buy. So A has to do with the CapEx budget. If you recall, I put out a very significant CapEx number for the year. That number has decreased dramatically because the price of computing power has decreased between 50 and 65%, depending on your reference point. That has a gigantic influence on our CapEx. Price downturns also have an effect on our income statement, meaning if price goes down and stays down, network difficulty either flattens or declines, depending on the severity, slope, and timing of that decrease. That allows mining profitability for those that remain to increase. So again, price downturn affects our income statement in that lower price, but more coins mined, or you can buy equipment much more cheaply. And we've had experiences where guys were under financial pressure and there was some real fire sales. And there still are some available that are kind of amazing. So that's how downturns can help us. Are there any plans to raise funds through sale of common equity or only using the ATM for the preferred? Let me address the last piece first. The ATM for the preferred has a $16 price floor. I don't anticipate changing that floor, but life could change, but I'm not issuing that from what I know right now. And are there any plans to sell? Are there plans to raise funds through the sale of common equity? We have a common stock. We aren't selling equity tomorrow. That much I would know. But, can we be in a position where we're selling equity at some point in the future? That's hard for me to comment on. Do you have the funds today for the first 20 megawatts of Dorothy and pay all corporate overhead through the end of the year? So this is a question I've gotten a fair bit. So the question is, do you have the funds today to fund the first 20 megawatts of Dorothy and pay all corporate overhead through the end of the year? It depends on the price per terahash. Am I buying at 10, 20, 30, or 40? So in the 20 to 30 zone, yes. If things escalate, the answer is no. So that's, unfortunately, the answer is it depends, but the market moves and we have to be cognizant of that as we capital plan. Okay, looking forward, what can we expect? More project level financing or financing via prefs? At today's pricing, the embedded interest cost, if I were to issue today at the pref, is almost 20%. Again, I don't like to use the words impossible, but I would view it as a highly unlikely event that at today's price, we would issue the prefs. We are much more likely to do project level financing simply because we've engaged Truist as our representative to talk to the financial community. And we have a very active process that they're shepherding us through. And the Truist is the old BB&T and SunTrust combination. They have a very strong power and infrastructure group. We have active dialogues. And so I would anticipate that it's much more likely that we would have a project level financing than a preferred financing. More questions? I'm happy to answer them. Follow-ups from anybody?
Looks like we got one more question. Nope, two more.
Great. Happy to have them. Okay, see what we have here. Can you break down your relationship with hosting JV? We have a 10 megawatt hosting customer at Marie. That contract is up at the end of September. We're assessing what to do with that. We might go prop mining with that 10 megawatts. We might continue with a hosting arrangement. I honestly don't know. I have on my desk various forms of analysis in terms of what we should do. So I don't have an answer for you in terms of what we're going to choose to do with that capacity and the pricing around that JV. I would rather not comment beyond that. It's an extremely active dialogue. And once we decide, I will let the market know. Would there be project financing at Dorothy? There already is project financing at Dorothy. Dorothy 1A has an investment from Spring Lane Capital. It's likely that if we bring in additional project financing, it'll jump into 1B or perhaps take over 2A and 2B. More questions are welcome. I think I've got one more underneath. In addition to Spring Lane on St. I see somebody hit that 2 times. So Spring Lane committed $36 million. They have decided to allocate that to 3 different locations for the main reason that they would like diversification on different power nodes. So each power node where a wind farm feeds into, it's almost a different market, almost different supply demand factors affect profitability there. So we're drawing down 12 million into 1A, but let's just say we go with Kati, which is on a different node. Spring Lane would be very interested, from my understanding with them, but not obligated to take the next tranche and jump into that and as project financing and trying to get that up and running. So they have an option to invest in our next 3 projects and on similar terms as we have outlined to Dorothy 1A. We have a great relationship with them. They've allocated that capital. So we sincerely do hope that if we start with Kati, which is on a different node, they would jump in and we'd be able to draw down another 12 million of their capital.
All right, Michael, looks like we have 2 more questions and then we're going to need to cut.
Perfect. Are you able to take advantage of the new IRA bill? Not directly, but to the extent that more renewables get on the grid, it is extremely beneficial to us. We will have more curtailed energy, more potential to buy energy in good economics, and make sure that renewable energy continues to be profitable for everybody. So from that perspective, it's very helpful. With your Q file, when does the insider blackout period end? Do other currencies to do so? Due to other current activities at the company, do you expect this to result in an open window? This is a matter of real debate at the company, and here is the answer. Filed on Monday, period ends, I think it's close of business Thursday, and from my understanding, I believe there will be an open window after that. And I've been learning on the job here a little bit. Just because we're not in a blackout period, I've learned that if we're engaged in major strategic transactions or fundraising, that the window for people up top in the organization is closed. So I believe, as you allude to, the blackout period will end, and based on my understanding, there will be an open window for a period of time. And that's really all I can say.
All right, Michael, thank you so much for this.
Thank you.
Thank you.